I think the people who are elite athletes and elite traders, how they process uncertainty, right? I mean, this is all it is. And, trading ultimately is the ability to process heightened levels of uncertainty and living with heightened levels of uncertainty. We're all wired to have an aversion to uncertainty. So in order to be good at trading, you have to actually lean into this hard wiring that it pushes us away from it. And it's the same with athletes, except they have a fixed amount of time that they have to process the uncertainty.
Welcome to the FundSeeder Rise podcast, where we uncover what it really takes to go from an independent trader to an institutional manager. I'm your host, Emanuel Balarie, and each episode we sit down with some of the world's top traders, allocators, and mentors to explore edge, mindset, and what defines a true market wizard. Today, I'm really excited about my conversation with a unique guest that really brings a blend of market experience, coaching, and mindset work to the trading world. John McAuley is the founder of Awareness Edge Group, where he coaches hedge fund traders on both the psychology and the practical methodology behind successful discretionary trading. He spent over 20 years in the global markets, held senior leadership roles at major financial institutions, co-founded a macro hedge fund, and even led trading teams across Asia. Now, what I love about John's approach is he doesn't just focus on strategy or performance metrics, but he digs into the mental game that most traders overlook. So, John, thank you so much for joining us today.
Yeah, thanks for having me. Appreciate it.
Yeah, so John, you built a reputation as, and this is what I love about you, someone that not only understands the market deeply, right, but really focuses on mindset and trading. And, when you look online, there's a lot of experts out there focusing on risk management or trading styles, but, not that many when it comes to mindset trading and so forth. So I would really love to know a little bit, and for our users and listeners as well, about your origin story and how you got into the game, so to speak, and then transitioned to this side of the business.
Yeah, well, I pretty much always wanted to be a trader. After I graduated university, yeah, I didn't get any offers, so I had to figure out like how to get through the doors. I then moved to Japan and I learned Japanese, and I figured that would give me an edge. And this was in the late '80s, early '90s when it was still quite a strong economy. And yeah, sure enough, that worked. And I was hired by Chemical Bank, which is merged a couple of times, and yeah, it is now J.P. Morgan. And I traded Japanese fixed income for about 15 years. I also worked in Sydney and Hong Kong. Yeah, I was mainly a fixed income trader I moved to BNP where I ran Asian rates for about 7 or 8 years. And then I got tired, I guess, of it. And I looked for some kind of new challenge.
Let me pause you there just quickly. Like, that's a big transition. You said you got tired. Like, what exactly happened from that perspective?
I just did it a long time, going to work, 8 a.m. to 8 p.m., 12 hours a day, wearing wrist 24 hours a day. Yeah, it just wore me down. And yeah, I needed some kind of new challenge, I think. And so, I had a coach who had always told me, he thought I would be good at this. And so now he eventually talked me into moving to Chiang Mai, Thailand, where he lives. I basically lived down the road from him for 10 years, and he's known to be one of the best coaches in the world. So, he mentored me for 10 years basically, and I would go there in the morning and, pretty much leave in the afternoon. And, so really, really fortunate to be mentored by, one of the great coaches. At the beginning, I didn't plan on being a trader coach, but when you first start, you have to find guinea pigs basically, right? Because there's a real learning curve to coaching. And, all my friends were pretty much at hedge funds. So, I started coaching them, and, I ended up doing well with them, and then they started telling people who started telling people, and, this was a real word of mouth business. So, yeah, I kind of sort of fell into it because of the people who I initially coached. And yeah.
Were they like trading at like big shops? Were there independent traders? What was the profile of sort of the first set of people you coached?
Yeah, they were all at the big, the big macro hedge funds. I think one of them was at Millennium, another one was at Brevan Howard. So yeah, all these really big hedge funds, and they just started talking, and they told people, and slowly but surely the business started to grow. And it's kind of funny in trader coaching. There's pretty much two. Yeah, I don't know if you call them eras. I guess there's the pre-show billions and post-show billions. And if you remember, the show billions was about one of the main characters was an actual psychology trader coach, right? And so before that, it was kind of looked down a little bit, or people were a bit shy, I guess. And I would meet traders, and they would say, "Let's meet at some coffee shop around the corner where no one will see us," basically, right?
Interesting.
Yeah. Yeah. And then after the first season of the show Billions, it became accepted. After that, I think my business doubled because of that
Interesting.
show.
Interesting. There was a almost like a stigma that if you need help
Mhm.
and need a little bit of coaching, you're less than, if you will.
Well, yeah, I think it was seen as a sign of weakness. Most people who work at hedge funds, are very smart. They were first in their class. They got where they were through sheer determination, and they were used to outworking people, outsmarting people, and having to ask help from someone. I think wasn't easy for some of them. And yeah, once that show sort of confirmed that actually some of the best traders in the world have coaches. In fact, all of the really big traders in the world have some kind of coaching going on, and that's what you see when you do this, is that it's actually the good traders who want coaching. It's the traders who are somewhat unsure of themselves or a bit insecure. They actually shy away from the coaching.
That's interesting. That's interesting. One of the questions I've had, and I'm curious your thought about it, right? So when people typically think about coaching, I mean, I would imagine their immediate association is like sports or athletics, and I've always thought, I mean, in fact, a few times when I was speaking with Jack Schwager from Market Wizards, I remember he made this comment that some people can run like a 4.5 minute mile. There's a certain subset, but then to really be an elite and run it even less than that, you just have to have it. You have to have what it takes. So I'm curious, in terms of coaching traders, what you've seen, you know relative to sports coach or the elite athletes of the world. Are there any similarities? Are there any differences? If you kind of just tell us your perspective, that what you think about that.
Yeah, I mean, I think the people who are elite athletes and elite traders, how they process uncertainty, right? I mean, this is all it is. And trading ultimately is the ability to process heightened levels of uncertainty and living with heightened levels of uncertainty. We're all wired to have an aversion to uncertainty. So in order to be good at trading, you have to actually lean into this hard wiring that it pushes us away from it. And it's the same with athletes, except they have a fixed amount of time that they have to process the uncertainty. There's a game, or if you're a golfer, there's 18 holes, and then you go into the clubhouse. With the traders that I deal with, they have to process that uncertainty 24 hours a day, right? They go to bed at night not knowing what's going to happen when they wake up. And then they wake up in the morning not knowing what's going to happen. And so basically, the uncertainty never stops, right? And so I mean, it takes a certain mentality that's very rare, actually, in order to excel at the very top level, a certain mentality that learns to live in constant uncertainty. If you're a management consultant or if you're an accountant, you'll have periodic uncertainty, and then you solve it, and then you go back to doing your job. With traders, it never leaves. It just never leaves. And in order to be at a top level, you have to learn how to deal with that. And, that's where I come in, is ultimately helping them process high levels of uncertainty. The uncertainty, especially when you start to lose money, it goes up much higher, and that has an emotional reaction. How do you deal with that emotional reaction? This is what athletes deal with. This is what golfers deal with. But then the game finishes, right? And they can go, they can go home. Traders can't go home and avoid the uncertainty. They can't go, into the clubhouse and have a beer and it's all over. They have to do it all the time. So they all deal with uncertainty. The top athletes can deal with uncertainty, but they do it in limited periods of time. Whereas the top traders that I deal with, it's there all the time. It's even there on the weekend,
Yeah,
just never goes away.
even if they're flat on the market, like, and they don't have any positions, they're still just their mind is still wired of just still thinking, "Am I missing it? Should I be in?" Because it's open 20, throughout the week and so forth. Now it's really, yeah, it's all over the, global.
Yeah, it's global. And, most traders are, they're just not flat, right? They're not paid to be flat. They always have risk on. And so, yeah, how do you deal with that? And, how do you deal with it individually? And then, when things aren't going well, when the uncertainty ratchets up, which to say, you go through an extended drawdown. How do you deal, being a good parent? How do you deal with, being a good partner? It affects all of your life, right? And, I've dealt with clients who, things just, they're not getting traction and things aren't going well, and it affects everything, right? They're not good parents, they're not good partners, they're not good colleagues, and so it can be, an emotionally excruciating job at times,
Yeah.
and some people just can't do it, right? I mean, I think I don't know what percentage of people who have the correct wiring who can do it, but it's in the single digits percentage wise of,
Oh,
the
wow.
human population.
But
Yeah.
they either have it or they don't. Similar to the point about I mean,
Yeah,
generally from I mean, how many let me ask you a question too, John. How many, I mean, single digits of those that can deal with uncertainty? So, I guess the question I have as a follow-up to that, are you able to spot that pretty early in your coaching and evaluation process of saying this person has what it take potentially to do that? Or does it take a little bit of time and there's hope for those that start off on the, on the wrong foot that they can course correct?
yeah. Well, look, I think you can learn certain strategies that will help you to help you make money. The question is, are you going to be the kind of trader who can make a lot of money? And that just involves, heightened uncertainty. In order to make a lot of money, you have to lean into a lot of risk. So I think there are quite a few people who can learn to deal with a certain amount of uncertainty that allows them to make a certain amount of money. But for there are there are much less people who can really deal with taking lots of uncertainty, which is say lots of risk and making a lot of money, if that makes sense. And I tend to deal with hedge fund clients, so a lot of them have already been filtered out. Most of them have worked at investment banks, and so the people who aren't wired correctly tend to be filtered out. I also give all my clients a personality profile, and that in and of itself can weed out a certain percentage of traders, I would say, that just aren't wired correctly in order to live with such heightened uncertainty in their life, let's say.
Yeah. That's interesting. Okay, so when you started evaluating traders, some of the other things that you noticed that separated elite performers from everyone else. So we talked about one, which is this individual deal and live in a constant state of uncertainty in a manner where it doesn't negatively impact, forget about just their trading performance, but their personal life, their family life, their day to day, their demeanor from that perspective. Are there any other sort of elements that you've seen that makes an elite trader successful and when you evaluate them?
Yeah, I think I mentioned I give everyone a personality profile, and it's sort of like a doctor giving you an X-ray, right? Except it tells me how you're wired at the personality level. It tells me your conscious wiring, but most importantly, it tells me your unconscious wiring. And one of the things it looks at is they call it different things. I mean, I call it stubbornness. Yeah, it can also be called dependency, but at how much, not consciously, but at an unconscious level, you can be influenced. And this is one of the really important insights that I've had with traders, in that the traders who tend to do better, and there are exceptions, are the ones who are a bit stubborn, the ones who actually don't, not consciously once again, but at an unconscious level, don't like to be influenced. Okay. Now, if you think about that, makes a lot of sense, because when you're trading, you're just being, there's constant information coming at you that can influence your decision about the trade. And, the market will move against you. The market will, the market will go up and down, or you'll get some information from a strategist or an analyst, or your boss will say something, or the colleague next to you will say something. You're constantly inundated with this information, and the traders who tend to do better are the ones that, for the most part, aren't influenced by a lot of that. Right? They have an idea and they stick with it. Right? Now, and that's very, very important when it comes to trading. And so, is having this kind of, I mean, I just call it stubbornness. And I can see that very quickly with traders who are the stubborn ones. Now, if you don't have that profile, you can still make money, but in general, you won't make as much, because you'll be influenced out of winning trades too often. Right.
Interesting.
I mean, yeah.
Interesting. And I think that's one. Go ahead.
I have so much data from this profile I give, and it became really clear that the traders who tend to make a lot of money all have this sort of trait.
And that's one of the, our vision at FundSeeder is obviously finding undiscovered, unknown traders, or traders who don't have access to capital or early in that cycle. And most of them, as we were talking briefly before the call, are just trading their own money. Maybe they have some friends and family capital, but now they're transitioning to manage other people's capital, institutional capital. And what I've noticed is frequently throughout my career that some can make that transition, and some are influenced negatively when they first get the outside capital and perhaps have someone looking over their shoulders. I remember one time, Jack and I were traveling, and I think we were some European country, and we met this fantastic trader. I mean, absolutely fantastic, disciplined, and we gave him some capital, and he couldn't handle it. I mean, he just absolutely could not handle it, because he believed that we were looking over his shoulder. And to the point you were making earlier, he was influenced by our allocation and how we potentially were looking over his shoulder. So I'm curious, and this is probably, we'll spend some time on this. One of the biggest things that, we'd love to explore, of how can someone who is transitioning now to receiving outside capital handle this transition well?
Yeah, yeah, it's a great question. I mean, the issue ultimately is, and what I'll work with these traders, is they have an emotional comfort zone. They've been successful. You guys have selected them, but there's an emotional comfort zone that they're in, and if it's their own money, that's what they're comfortable with. As soon as you start getting extra eyes on your P&L, then you're getting outside your comfort zone, and you start to have emotional reactions, especially to losses that are different than you had before. Okay. And 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 so the more discretion you have in your trading, when you have different emotional reactions, especially to drawdowns, the quality of your discretion, this quality of your decision making, your discretionary decision making, goes down a lot. Okay. And so, the way to work with that is for them to be aware that it's going to happen. There's going to be a period of time. Yeah, I work a lot with people who come from the investment bank side to the hedge fund side, and almost all hedge funds know there's like a 2-year transition time, because the emotional setup, the emotional comfort zone they had at the investment bank, is completely different than the emotional setup or the emotional comfort zone they're going to have at a hedge fund. It's just a completely different job emotionally. And so they have to be aware of that. They have to be aware the more discretion they have in their trading, them going to go through this transition where the quality of their discretionary decision making is going to go down for a while. Now, the more you can bring awareness to that and how it's going down and the signals for them to watch for, and perhaps putting in, depending on how they're wired, putting in certain guardrails around their trading in that transition period, and it can help them a lot. I don't, to answer your question, there will be a transition. The more discretion they have in their trading, the harder the transition can be, but it's actually very coachable. They just have to be aware of, how their discretion is going to suffer for a while.
Got it. So first, just the awareness, self-awareness, awareness edge group, right? That the name of your company. That okay, I'm getting outside capital, and this is going to impact me, whether I think it will or whether I think it will not, because there's a sort of this emotional subconscious connection to it. Is there anything else like practically that they can do, or is there something? I guess and I'm just thinking out loud here. I guess the idea of coaching, right, is you have this transparency and this accountability to be able to share with someone. Is that a big component? Any other kind of just nuggets that our listeners can receive?
Yeah, I guess first they need to understand actually, how we make discretionary decisions. I mean, if they've only traded at home with their own money, they may not really appreciate how discretionary decisions are made. I mean, the thing I always say is that, every discretionary decision we make in trading and in life, we're at the mercy of our emotional state. I mean, for people listening out, if you want to remember one thing, is that the quality of your discretionary decision making depends on where you are emotionally. There's the old adage, when you're really angry, don't make an important decision. All right. This is just, it's similar to that, except traders don't deal with anger. They deal generally with, fear of loss, fear of missing out, and a couple of other emotions. And so, yeah, they just have to be aware that the clarity of their emotions before won't be there. There'll be an emotional distortion through which they make discretionary decisions, and they need to understand, yeah, through talking to the coach about how they're feeling in that moment. And we can point out what are some of the characteristics of that. How do you feel when you're suddenly suffering from fear of loss that you didn't suffer from when you were trading your own money? Basically, the fear of loss goes much higher when you're trading someone else's money because you have extra eyes on it. When you're trading your own money, you can have a bad day and you're the only one who knows, right? When you're trading someone else's money, there are lots of people looking at that number, and it changes everything. It's about talking to the coach, but also understanding what are the signs that you have when when there is, elevated fear of loss. Everyone has certain characteristics or certain things they can look for when that's happening to them. Okay.
Yeah.
Yeah. So, I mean, I keep coming back to this word awareness, and it's that's what it's about. It's about elevated self-awareness that you wouldn't have necessarily had when you were trading your own money.
Yeah, we had another guest that I just interviewed, Neil Berger, and funny enough, he also majored in Japanese,
Okay.
and he was
Good.
telling me a story about how Japanese banks had, employment for life, and that allowed him to be able to take some risk, not have that fear that he would be out on the street if he had a bad trade. I'm curious, what is the importance of, if you are going to get outside capital, of having the right outside capital from an investor that is understanding of exactly what we just talked about? And then and then have you seen, maybe some of your clients that you coach and their employers, the ones where they have a much more safe environment of understanding of
Mhm.
drawdowns, and that's articulated early? Is there a correlation of success or for that trader.
Yeah. Yeah. If you understand the drawdown rules, if you understand the risk parameters, it's much, much easier. It's when you feel like you're being judged or there's discretion from the investor or from the boss of the group, and you don't actually know like how they're processing how you're trading, right? That's when you get in trouble. And certainly for investors, you want to be hands off. In my opinion, at least, there needs to be an understanding of what the risk parameters are. And, you leave it to the trader then. The more you intervene, the more you contact the trader, the more you bother them, the more is everything all right today? The more you do that, it causes, it causes elevated uncertainty. Okay. And so, yeah, that's from the investor point of view. I mean, I have one client who he runs his own fund, and he had one investor who just kept calling him every day and bothering him basically, and he eventually had to set him straight. You are not helping me. You are really hurting the way I trade because I'm worrying about your reaction more than I'm worrying about what the right trade is. Most of these funds are run these large hedge funds are run reasonably well in that traders understand the risk parameters. There's a certain drawdown where they'll cut your risk by half, and then they'll have a chat. The ones that are well run don't intervene that much, and there are some exceptions, of course, of
Yeah.
of funds that aren't run very well, or the person running the group will, if they're having a bad day, they'll yell at them or something, and that's extremely counterproductive.
That's helpful. I think it's very helpful. So you've talked a little bit about some sort of characteristics or early things that you spot from traders that are elite or can transition. Are there any red flags, or even maybe choose one red flag that you typically see in traders who do struggle, and perhaps like a story of like, okay, I spotted this, and sure enough, it was a red flag, and this is what happened.
Well, there are a lot. Externalization of blame is one of the main red flags. I mean, I actually interview for some of these funds as well. And one of the things that I look at the beginning is when they're talking about their performance, how much are they taking complete responsibility for their, for performance that wasn't good? Are they blaming their boss? Are they blaming systems? Are they blaming, the weather? I've heard it all. You can see this quickly. Traders that are making excuses for their losses, whether they're legitimate or not, will almost always trade from a position of disempowerment because they're externalizing, when things go badly. Almost every really good trader, when you talk to them, and they talk about losses, they almost all go, you know what, I just got that wrong. I got to do better. Right. And they don't externalize. And, there's issues at all these companies, right? The systems may not be very good, or actually your boss may not be very good, or the market may not be trading in a way that you could make money. And when I hear any trader give power to the market of like, oh, this is a crap market, right? Then there's an issue there because you have to believe that your trading P&L comes from you and not the market. So external is that or external.
That is, it's interesting that that's a red flag, because externalization of blame is exactly the opposite of allowing other people to influence you and your trading. I mean, so like you were talking earlier about how like the best traders are not influenced by outside noise. So therefore, if they're blaming something, that clearly is an influence, and already that they're not elite from that mindset. They're not taking that responsibility or feel they have edge, right? And they're not.
Exactly.
That's a good point.
Yeah, and believing that the edge is, I mean, maybe this is getting a little bit too much in the weeds, but your really good traders believe that their edge is in their execution as opposed to their idea. I mean, this is discretion, highly discretionary trading. You need to believe that what separates you from the other traders is not the idea. It's how you execute the idea. It's how you execute the trade. It's how you manage the trade. It's how you size the trade. It's how you structure the trade. And that's the edge. And if you make money on it, that's great. But I saw that early on as well. And like a lot of the really good traders, they'll tell me, John, I love this trade, man. I just love this idea, but I can't find a way to put it on. And those are the traders who truly get it. That And I mean, and then you get the other traders who aren't as good. And I love this trade, and they just go in and put it on, any which way. There was recently like everyone was trying to short gold recently. It was really hard to short gold though, because the option market, there was a huge skew. Puts were massively expensive. And so, and with gold though, you kind of want to optionalize it. It's a very volatile commodity. They just couldn't find a way to optionalize shorting gold except through like some knockout structures. So a lot of the clients I had wanted to short gold, but the really good ones actually were kind of, I just can't find a way to do this. Right. And so, you start to notice things like that as well.
Why do you think that, just transitioning a little bit to just this mindset and the coaching side of the trading, and mindset is real edge? I mean, that's a takeaway I think from our conversation, because not everybody has it, and based on what you've said, less than 10%, single digits. Or what's the percentage? Is it 9%, or is it as low as like 1 to 2%?
I mean, it depends. For traders who can really make a lot of money, right? It's less than, I don't know, it's 2-3% maybe. Yeah. I
Yeah.
mean, but these are the traders that you read about, the greats. And because in order to make a lot of money, you just have to lean in to such uncertainty, and you have to go to sleep, and you have to live a normal life. And yeah, so it's incredibly hard. And the mindset, yeah, it's if you believe you have an edge in mindset as well, if you believe you have an edge in self-awareness and awareness, and an edge in execution and structuring and process, then you're well on your way, right? And one of the big things is there's a huge disconnect on how traders spend their time, and how they actually make money. And as you well know, most traders spend all their time thinking about the trade idea, and not very much time on how they're going to execute and manage the trade. And I think especially with some of these traders who aren't, who are starting, you really need to remember that spend as much time as you can on if you have an idea, spend several hours thinking about how you're going to size it, how you're going to structure it, how you're going to manage it, and taking away as much discretion as you can from that trade, especially at the beginning.
So why do you think that most traders, and we're not talking about the ones you're coaching, because you're seeing the ones that are elite, but we're talking about the large, influx of talent, right? Since 2020, since COVID, online trading, and there are those that are putting up excellent return risk numbers. But why do you think in the industry as a whole, and for many traders, that they obsess over strategy, right? Like, even when you look at their decks, like, this is what I do, and not as much focusing on mindset, which really clearly is what correlates to longevity and even scale. Like,
Yeah.
is it misinformation? Is it just too much, learning the wrong way? I mean, what do you think the reasons are behind it? I'm just curious.
I think it's hard. Most traders spend time on the intellectual, rational part of side of trading. That's what they like. And it's something that if you put your time and effort into, you can actually start to master something intellectually or rationally. But becoming more self-aware, working on mindset is actually what they called insight-based learning. It's not intellectual learning. It comes through insight. And this is what I do is I introduce concepts to traders, and then they have to go practice that concept. And it could, and I mean, I'll introduce the idea, and they'll understand it intellectually. But then they don't really understand it until they practice it. And then they have an insight about the practice. So, which means at a feeling level, they actually get it. And, this is called an aha moment or an epiphany, or, whatever you want to call it. But that's how you learn about what's happening internally, is not by reading books, right? I mean, I used to always laugh at airport bookstores. They had all these self-help books, and people are trying to do work on something internal by reading a book, and that's only half of it. If you understand something intellectually about what's happening internally, you actually don't understand it well enough to put it in the practice. You have or to truly, you don't understand it at a feeling level where you can put it into practice consistently. And so that's a long-winded way of saying the internal work is really hard, And it's actually quite uncomfortable for some people because, and particularly for like some of these guys I deal with, they're all, they all went to elite universities. They were all first in their class. Probably half of them got perfects on their SAT. They know how to do that part of the work that deals with trading. Where they're uncomfortable is when we start talking about what's happening, internally. And a lot of them have real issues with that. And, they want to intellectualize these things that I'm talking about, but they don't do the work to have the aha or the epiphany. Well, now I get it. I talk a lot about what happened, the internal dialogue, the voice in your head. It's hard for us to understand what's happening at an unconscious level, but one of the windows is that voice in your head, the self chatter, internal dialogue. I can introduce this concept of, look, you really need, especially in times of stress or drawdown, you need to listen to that voice because that's the window into your personality. That's the window into the unconscious. And so they can understand that. They'll go, okay, I need to listen to that voice in my head. That's a window into my unconscious. But if they don't practice it, they're not truly going to understand what I'm talking about. And then they'll start to listen to that voice and suddenly they'll have a drawdown and they'll hear that voice just attack them like, oh, you dummy. What are you doing? You're never going to make it. Then they go, I got it. That's the aha. That's the epiphany. And that's when they truly understand, oh, that's what John was talking about. That's why I need to listen to that voice because that tells me when my personality or my unconscious is beating me up and it's going to cause me to feel, all these really negative emotions. And
In
that's when I shouldn't be making a discretionary decision.
Yeah. So it's not listening to the voice always in terms of positive. It's oftentimes if I'm in a state where I'm beating myself up and I'm like condemning myself in a state, like don't like walk away from the trade desk because you're probably that's not a you're probably in a bad mental state to make a trading decision.
Yeah. Yeah. And I mean, I start every discussion, every meeting with the same question. I ask, "How are you feeling?" I'm not asking how you're doing. If I ask, "Oh, how you doing?" I went down to Starbucks, I got a coffee. I'm legitimately asking for people to take a second and and empty their heads. Sometimes we take a breath and bring their awareness to physically how their body is feeling. And then they answer me on this emotional continuum from expansion, which is just the summation of your emotions that when you're feeling good. And then the other side of the continuum is emotional contraction. And that's all these tight emotions that we don't like talking about, especially men. And so we just say, I'm contracted. When you're contracted, when you're feeling all of these tight emotions, which traders feel a lot, much more than a normal person, because they shouldn't do it, but they almost all do. Their emotional state depends on their P&L, right? So their P&L is going up and down, and they're waving in out of expansion and contraction. When you're contracted, there's an emotional distortion, and you don't make good discretionary decisions. Now, this is true in life as well. And so, yeah, there's a constant practice that traders need to do to understand where they are emotionally and know at any given time the quality of their discretionary decision making in their trading. And sometimes traders can be on that contracted side of the emotional continuum for several days. I mean, I have
Is
one guy, he's 1 month, he's been contracted.
Is contracted, just so I understand, contracted, is that like a person who's maybe overly introspective, or is that what you mean by contracted, or what does that mean?
Yeah, it's good. But no, it's just all of us wave in and out of emotional states. It's normal. But contraction, when I talk about it, means that the summation of your emotions at that time are all these tight emotions, right? It can be fear of loss, it can be anger, it can be frustration, it can be depression, it can be any of those things. So I don't like using the name of emotions because everyone feels them a bit differently. We just say contracted. And in a trading context, a lot of it's fear of loss, right? So when you lose some money, you get contracted. Now, if you're a highly discretionary trader and you need to make some discretionary decisions, you're in trouble because it won't be a good discretionary decision because you're contracted. And so, but you have to know where you are. And that's this, that's a lot of the work that I do is understanding, oh, you know what? I'm contracted. You don't judge it. But then what do you do? Do you just go trade like you normally would? Well, sometimes you don't have a choice, but if you have a choice, no. you need to do something that will perhaps make you feel better, push you more into expansion. And we talk a lot about that.
Makes sense. Makes sense. What comes to mind as we talked about the parallels of trading in sports, I think my son, his tennis coach mentioned Djokovic in terms of mindset of trading. And I remember him telling of a mindset of tennis in that regard. And I remember him mentioning how Djokovic, when he makes a mistake and then he hears that critical voice in his head, he doesn't dwell on it and say, but it's almost like a trigger where it's like, oh, that's that critical, and then he just uses that to almost snap himself back out of it and say, okay, now I'm going to focus on the next match. And so it's kind of that awareness of that critical voice, but then not overly like dwelling in that critical voice, but using it more as a prompt of, okay, this is not, and then moving to the next step.
Yeah, 100%. And he's obviously been trained by some performance coach to catch that, right? Most people don't catch it. They don't have that level of self-awareness. That voice in our head is always kind of chirping away, but generally we don't listen to it. And it is controlling a lot of our behavior and almost all of our emotional reactions is that voice. And so the more you can bring awareness to it and start to see patterns of how it influences you, and like what he's saying, he's learned to catch it and let it go, learn from it and let it go. The same thing with traders. Traders have a bad day, that voice can really start picking up and start beating them up and then start worrying. Are you going to get fired? Or, and then some of these traders that we're going to deal with worrying about what the investors are going to say, worrying what you're going to say, worrying what Jack's going to say. These are all things they didn't have to be were concerned with. And now that voice is going to pick up on that. Right? And, when they have a down day, that voice is going to go into hyperdrive like it didn't before. It's going to beat them up and beat them up, perhaps. And then they're contracted, not like they were contracted before. And they're going to start trading like they did before. And the quality of the decision making is going to go down.
I asked this question earlier, but I want to ask it again. In terms of, can a trader develop this mindset, or is it innate? And obviously the theme of this podcast and what we're doing at FundSeeder is we're finding what we think are elite traders, at least in trading their own money, but then trying to transition them to trade institutional capital. And so to a certain degree, they've already been ingrained in their set, if you will, and some either have it or they don't. But for those that are maybe listening and saying, I'm like doing like totally the opposite of what John is mentioning,
Yeah.
and
Yeah.
it has impacted me. Can I develop this mindset? And the second part is it easier to develop it early? Like if you're like when you're just starting trading versus you've done it for years.
Yeah, both good questions. You can develop it. Some people I think, are naturally good at it. Particularly athletes. One of the reasons athletes can be good traders is because they're they're always aware of what's happening physically, right, in their body, all the aches and pains, and that's why a lot of these funds they like traders who have had some kind of athletic background at a relatively high level. So some people are naturally good at it, but it can definitely be developed. There's all kinds of self-awareness practices that you can do to get better at it. And the second question, it's better to start earlier before the old habits. As we get older in life, our ingrained habits tend to, get stickier and stickier. And so the earlier you can do it, the better. Those still, you can start at any time, but definitely younger is better, I would say, before some of the old habits, before the habits start getting really ingrained.
Yeah. I can imagine it's similar again to sports. And when you think about sports and using my kids as an example, my daughter plays soccer, and she has some coaches, and I mean, they have this repetitive training, right? Like it's the doing the work when everybody else is out there playing, right? If you want to go to that elite level, are there training plans, or are there, beyond just this introspective, like, hey, this is how I feel, or like, are there certain, plans or training plans that you recommend for traders that they can do, to get, you know, to get up to speed or to get an edge on their competitors?
Yeah, it's a good question. It's a hard one to answer because everybody's different. I mean, when I take a client on, I give them this personality profile so I can see how they're wired. I also talk to them. I have these extended 2 to 3 hour conversations so I can really get to know them, know their history, know their past, because you, there's not one thing. I mean, everybody's wired differently, and everyone has past experiences that contribute to their how their personality's wired, and so there's not one thing that works for everybody, right? You have to personalize this, and so yeah, I'm hedging myself because everything I think about to tell you, it may only help 30% of the people. Everyone, you just have to, in this job that I do, you have to personalize it. And I just keep trying things with people, and sometimes they work, and which is great. Sometimes they don't work, and then I give them new things. But I would say one thing is doing some kind of self awareness practice. Okay, starting it. Okay. Now that can be anything. I mean, that can be yoga. I mean, I think yoga is one of the best practices for traders. In fact, a lot of very famous traders they do morning yoga. It's pretty incredible the number of them who do morning yoga, because they get fit, but it's also a way of bringing self awareness to what's happening internally. But any kind of self awareness practice, there's all kinds of apps out there. There's one called Calm, which a lot of people are using. Things like that. But the main thing is understanding, we operate at two different levels, the sort of conscious, intellectual, rational level. We overestimate the importance of that, especially in trading. And then the other level is what's happening at an unconscious level, and that's the emotional level. And if you can just understand that what's happening at an unconscious level is making so many more decisions for you than you think it is, and you find that out in trading very quickly, right? That when you have discretion, your discretion is being heavily, heavily influenced by what's happening, what's happening internally, and it's overriding what you intellectually or rationally know you should be doing. Right?
Yeah.
I mean, I have lots of clients who they just tell me, I just keep doing the same thing over and over. Why do I keep doing that? And
Yeah.
these are relatively high level traders, right? And they still just over and over and over make the same mistakes. And so, just that, if you can just understand that in trading and in life, that we're being influenced heavily by what's happening, not at a conscious level, but an unconscious level.
Yeah. I think that's good. I think the last point in life, you're the mentor expert, but in terms of a potential mindset trading plan, it might be a good idea to apply it in day-to-day life from a perspective. Do I have, in this situation, is there peace? Do I have a sense of peace? Am I being contracted like you're talking about? Like, am I pausing to not make like irrational decisions or reactions when I'm not in that proper state? And, it becomes actually probably a lot more fruitful, and then it doesn't create an all-in mentality of trading, because I would imagine that the most successful traders you have are those that, again, can go home on the weekend and enjoy their lives, because they understand
Mhm.
that, they can't control it. It's uncertain. And the best thing for them to do is to be at peace or not be so critical of themselves or mistakes.
Yeah,
And so that's probably
yeah,
a really good prompt. Like, if we can all apply that in our day to day life, we
yeah.
probably make a lot more decisions and then be able to actually enjoy and then have the longevity of it, of trading and anything else we do.
Yeah, definitely. Yeah, I agree with all of that. And probably, I was going to say, probably 20-30% of what I do is non-trading related, dealing with relationships. I almost always try to talk to the partner or the spouse. Is dealing with what's happening personally. For some, I mean, I have one client. That's all we talk about. We don't even talk about trading.
Yeah.
It's
Yeah.
about what's happening personally. Is it, do you are you living a well balanced life? And it just definitely it contributes to trading well. So extremely important.
I'm curious if you have any experience just transitioning a bit with this idea of now a trader is managing outside capital. And this is different than, I think, most of the traders that you are coaching that are internal and they're managing internal capital. But this would be with those that are looking to build trust with outside investors. So they've gotten to a certain point in They're looking to receive outside capital from allocators that are sophisticated, and they might get the deck. They could see the strategy, they could see the returns, but now it's that one-on-one conversation, and
Yeah.
they're paying attention to see who exactly is this person behind the deck, and do they have that mindset to transition well. What have you seen that investors are looking for before placing their trust with the traders and then placing some outside capital?
Yeah, it's interesting you asked this. This is another little bit of my business is helping traders talk to investors. Actually.
Oh, that's
So
good. That's good.
yeah, I mean, the big thing I work with is for them to understand investors are going to invest if you connect with them at an emotional level. Because a lot of these guys are really smart and they truly believe, that their strategy is the greatest. There's a bit of arrogance with some of these guys. They're almost in some ways they think of the investors as kind of beneath them a bit, as something they have to do. I mean, and the main thing they need to do is to connect emotionally, and I call this creating significance. But we have a whole lot of strategies of not going into the actual ins and outs of how you trade until you've established that emotional connection at the beginning. They need to like you, basically. And if not like, connect with you emotionally. And the investors may not even know that, but it's there is a sales component to this. Salesmen there are very good at getting you to connect with you at the beginning, right? They'll ask about your family or whatever, and they'll try and find something in common on, oh, my son plays soccer too. And they do all this. And a lot of these traders, they think that's beneath them, right? But you need to connect at an emotional level somehow. And that doesn't necessarily mean they like you. It means that you've like, yeah, I think you know what I'm saying. That like both of you go, yeah, his son also plays soccer, or his wife also is a major in psychology or something. There's something that you have to connect with them on, and it sounds you know, small and mundane, but it's very important. In fact, I just had a client, and we've been going through this, and he is finally raising capital, and he has the most incredible returns, and he couldn't understand why the investors couldn't see his brilliance, and that was his internal dialogue. Like, why, if they can't see how good of a trader I am, then do I really want their money, kind of thing. And then finally we got around to, what, they gotta like you a little bit. You can't be an arrogant,
Yeah. Well, I agree with that. I mean, I've had conversations with traders, and I guess it's just that internal connection point, right? Where it's like,
yeah.
I'm not enjoying this conversation. And if I'm not enjoying this conversation because there's no connection, like it creates kind of a filter for me. And then I've seen others where there's that synergy, that connection, there's a relatability, and you're almost opening up so there's almost like a mindset of allocators, maybe that, like of what they look.
Well, yeah. Yeah, I mean, it's actually fascinating because you think it wouldn't be this way, but, this is unconscious stuff. Even the investors don't know it, but
They don't. Yeah.
they need to connect, and they'll just walk away going, I didn't like that. Even though it's great returns, great trader, great strategy, very articulated, 5-year track record, all of the metrics are outstanding, but they just walk away going,
So what are
I don't
some
really connect.
Man, I had no idea, so I'm glad you brought this up, that this is a part of your business, because I think it is a critical piece. So part of the accelerator and what we're doing is, eventually, as we take them through this process, we then introduce them to outside investors, and it's true of really anything in life, right? First impressions, right? Like, you kind of know really quickly. So what are, like, some things that, I mean, is that they can do to increase their likelihood? I mean, is it beyond just the things you mentioned, which is, relatability, like a little bit of small talk at the beginning? Is it telling their
Mhm,
story, where they share a little bit of vulnerability of like, hey, this is how I got in the game? Um,
mhm.
is it just coaching them and training them to kind of up their emotional quotient, if you will? Right? I mean, some of these guys, I would imagine, are extremely smart. They've never that's just not who they are, but they have to adapt and say, "Hey, make a little bit of effort and, like, have a couple canned stories to
Yeah.
start off with." I mean,
Yeah.
I know this is a whole thing that you're doing, but just on an
Yeah.
overview of, like, some key
It's
points.
it's all of those. It is at the beginning having certain strategies that you know, you're basically probing for some kind of overlap, right? Something that you have in common. Um, the family's a really good way to talking about your family, talking about their family. If you live in the same city, they may go to the same school, or you're basically probing for some commonality. But also, you want to inspire, and inspiration is hard for a lot of these guys because they're so they're so intellectual. They're and rational. And how do you inspire? You inspire by emotion again, by connecting emotionally. And you do need to show some vulnerability sometimes. Talk about how hard it's been, and so yeah, there's it's all of those things. But I mean, I have a list of 10 things actually that they need to think about in the first 5 minutes. Questions they can ask, ways that they can try and connect. I mean, as I say, I call this creating significance, but it's basically connecting at a non-intellectual level, connecting at an emotional level.
Good. That's good. One more question and just a couple rapid fire questions. But, to sum up, we've had a lot of different topics for this year's FundSeeder Rise cohort, and many are preparing to raise outside capital for the first time. What is the one thing, that they need to understand before they scale?
They need to under that they have a process. They need to understand what their process is, okay, in terms of how systematic or discretionary it is and how scalable that process, and understanding that you need to have a process that is, how do I put this? That as the capital goes higher, the process doesn't change. Okay. And I mean, what I found in general, because I work with, at these big hedge funds where a trader may start on 100 million and then, their goal is to trade a billion or 2 billion. I have several guys on 2 or 3 billion, and they started at 100. And the key to them moving up was establishing a process that was it that allowed them to trade the exact same way, regardless of what their capital is. Which to say, they need to stay away from thinking in absolute amounts. They need to think in relative amounts. The more you think in absolute amounts of money, I made $1 million today. That's a lot of money for some people. But if you're on a yard, that's not a lot, right? And that's only 10 basis points. And so, setting up a process that's independent of absolute amounts, so you're not thinking about the money. You have some way of valuing things, but they're not in real money. They can be in basis points, or we also use something called units of risk.
So,
I have quite a few clients who talk about units of risk, and that's up to them what that is. But you just, in certain kinds of trades, this is what you risk. You risk 3 units of risk, and if you're on 100 million, or if you're on 1 million, 100 million, or 5 billion, it's still 3 units of risk. And you can even put your P&L in units of risk. And I mean, I have quite a few clients. We never talk about actual money ever.
yeah.
Yeah.
Yeah, I remember having a conversation years ago with a floor trader in Chicago at the board of trade that backed traders, and he said the ones that, I mean, that was the key point of uh, viewing versus units of risk, and the ones who were able to do that were able to scale and be successful. So I think that was actually a really good way to end off this podcast because as traders and emerging managers look to transition to manage outside capital, this is the time to start that process in terms of focusing not again on the dollar amount. And that gives them at least potential edge in the future of being able to scale and not having dollar P&L swings influence their emotions. And they have sort of that benchmark, which ultimately is what investors are looking for as well. So it's
Yeah.
extremely aligned.
Yeah. And at the beginning, you do the math, but then as you get used to not talking in real money, you slowly but surely stop doing the math. I mean, you can get to a place where you're actually not thinking about money. You're just thinking about units of risk or basis points, and I lost 20 basis points, and that limits the emotional volatility. I made 30, I lost 20, and of course you can do the math, but as you do that, you start doing it less and less and less, and by the end, it's just I lost 20 basis points today. Okay, right?
Yeah.
Life
Yeah.
goes on.
Yeah. Last question. What's your favorite book or one book that you would recommend that everyone should read?
Is the hour between the dog and the wolf I like a lot because it talks about intuition, and we didn't really touch on that, but very, very important intuition.
Thank you so much. Thank you for so much for giving your wisdom, imparting it to our listeners, and we appreciate it. Where can we find out more information about you if people want to hear about you and your company?
You can just go on LinkedIn. As I say, I'm a word of mouth. I have an unusual strategy. I don't do any social media really. I mean, I have a LinkedIn account, and I take clients, and I mean, for the most part, I take clients who were referred to me by past or former clients. Yeah, so yeah, I don't. I'm not real good self promoter. It's just all word of mouth. Yeah,
All right, excellent. All right, John.
yeah.
Thank you so much.
Okay. All right. Thanks. Bye bye.
Thank you for joining us on the FundSeeder Rise podcast, where we spotlight exceptional independent traders from around the world and explore the future of active money management. To learn more about FundSeeder, our mission, and how we support emerging managers globally, please visit us at fundseeder.com. The information shared in this episode is provided for educational and informational purposes only and should not be considered investment advice or an offer or solicitation to invest in any fund or trading program. Trading futures and other derivatives involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Until next time, stay curious, stay disciplined, and keep rising.